Hi, this is Zak Mir with the US penny stock highlights for Monday, the 20th of July. And we're overloaded as usual, but these are hopefully the best of the bunch. The LAN Medical is the starter here with a gap through the 50-day moving average mid of last month. We retraced through after the bull trap through the 200-day line, the orange line there, but a support coming in above the 50-day line and the floor of the channel from November. And what we're looking for here really is an end-of-day close above the 200-day line, preferably even a weekly close above the 200-day line at $2.25. If we can get that over the next few days, or obviously the end of the week, then we're looking at the top of that rising trend channel from the end of the last year at $5 plus, and obviously that would take the shares to the best levels of the past year. Stop loss here, which is perhaps the good thing, is that it's relatively tight. Back below the 50-day line and $1.70. On to the next situation, which is ImmunoTech. Here we've got a situation where the stock has broken above the recent neckline resistance, so that's above $3, let's say call it $3.45. End of day close above that, and we should be heading significantly higher. The reason for saying that is based on the trend channel that I'm about to draw. So basically going back from June last year, top of the channel there heading towards $8.75 and the floor of the channel, the support line there running at the 50-day moving average at $2.50. So basically above 345 we should have an ongoing breakout, only back below the 50-day line and the floor of the channel at $2.60. Really upsetting the recovery argument here for ImmunoTech. Let me try and say it properly. Next situation is one that is also worth following. Alexco resource here. We've gapped through that line of resistance from September. The line there at, let's say, we'll call it $2.50. End of day close today above that should be enough to cause a further follow-on move to the upside at the top of that trend channel from August last year, heading towards $4.70. That could be seen as soon as the end of next month. As I said, we would assume the shares would remain above the $2.50 level in the meantime. Only really back below the 50-day line and $2.20 outright negative for the shares at any stage in the near term. Next contender is Aclaris Therapeutics, stock which I can say properly, which is quite a relief. Here we've got the shares hitting the initial target there, that line of resistance from August last year, around $3.30. End of day close above $3.30 could give us a fresh target up to the steeper resistance line from last summer, heading towards $5 plus. And at this stage, really only back below that initial 2020 resistance at $2.40, really upsetting the idea of an ongoing recovery for Aclaris Therapeutics. On to the next stock, which is Canaan Inc. Here we've got a nice break of a triangle. Well, I suppose it's a triangle formation really. I was going to call it a falling wedge, but it's basically a triangle at the floor of this rising trend channel from the end of May. End of day close above that last neckline resistance there at $2. Let's call it $2.12 today, and this broken resistance line from the end of May should be enough to take the shares up to initial target at the 50-day moving average at $2.73. Best case scenario target by the end of next month up towards $4 and the top of the May channel. Stop loss at the moment back below $1.75, which is a recent swing low support. We move along on this rather extended list today. Here we've got Surrogate Networks. Nice situation in terms of a neat triangle breakout. We've got that one. Basically, it's from a rebound from the floor of the rising trend channel from as long ago as the beginning of the year. Nice end of day close today, back above $2.50, and the late April resistance should be enough to take us up to the top of the January trend channel, heading up to as high as $4 again by the end of next month. only back below the 200-day line and the floor of the channel from the start of this year at $2.10, really upsetting the idea of a recovery on this particular situation. Next stock on the list is DPW. Here we can see that shares had a massive gap to the upside today. What will be interesting to see is whether the shares can, over the early part of this week, close back above the resistance on the way down from the old spike in June. So let's call that $3.45. End of day close above that, or a weekly close above that for at the end of this week or next week will probably be enough to take the shares up to that resistance line projection target from back in November, heading as high as $3.50. Seems rather ambitious, but given the way that shares are happy to spike around, one could say that that is a certain possibility. We got the old peak from last month up there at $2.75, and only really back below that and closing the gap from the end of last week, really delaying the upside scenario for DPW. Moving along to the next situation, which is Endeavour Silver. One I was sort of thinking, I was sort of umming and ahhing about covering today, but what you can see here is that the shares have gapped through to the old resistance from the beginning of September last year. Let's call it $3.25. End of day close above that level should be enough to give us a follow-on move towards $4, which is an October resistance line projection from last year. And at this stage, only really back below the floor of the gap at $2.90, delaying the upside scenario. The bullish argument currently, or at least in the last few days, backed by the way that we've seen a golden cross buy signal between the 50-day and 200-day moving averages. On to the stock, which is looking pretty steady at the moment. If I can get the right EPIC code, IMV. Here it is coming up in the form of IMV Inc. And what's a standout here really is the way that we've got this, what's effectively a V-shaped bull flag. Those tend to be some of the more sharp signals in the technical and charting armory. We were also backed by a golden cross last week between the 50 and 200-day moving averages, and we were helped along by that resistance at the end of February at $5.09, which is not only just below today's intraday support, but has come in as new support for the shares. The idea here is that at least while we're above the 509 level, we could head up towards the resistance line projection from way back last summer, around $8.50, and that could be hit as soon as the end of next month or going into the first part of September. In fact, that resistance line projection there from the beginning of 2018, so quite a long-dated target to shoot for, but nice that we've got that old resistance becoming new support for IMV Inc. Next stock, also staying with the eyes, is one which I haven't covered here before. Idera Pharmaceuticals. Obviously these days we're very much on guard for anything in the pharma or therapeutics area. Here you can see that there's been a clear break of the post-September triangle for the shares. The top of the triangle, well, the triangle broken there at $2.30, and while we're above that, especially on an end-of-day close basis, looking for a top of May 2019 price channel target as high as $5 over the next 6 to 8 weeks. Be an added bonus today if we can close above $2.50, given that that was the brief spike high at the end of May, but anything above the 230 zone really can be regarded as a break to the upside. So the next stock is perhaps rather surprising, given that there's not that much charting history, but there's enough for this charters to come up with a charting view. Lion Group, basically here I suppose it's a V-shaped or a U-shaped formation that we've had here over the last few weeks. The initial resistance there coming in at $4.47, and that's now become the new support area. So while there's no end of day close back below $4.47, we're looking for a retest of that spike up to as high as $9 over the next month or so. So pretty interesting risk-reward situation for this stock. I suppose if we close the gap or have an end of day close back below that gap at $3.76, the game would be up as far as the bulls are concerned, but it does look as though, at least initially, we found support at old resistance for Lion Group. Just a couple of situations to go in terms of new stocks to look at. Molecular data, one that looks pretty exciting at the moment. Trendline break being the reason in the first instance to look at the stock. Also breaking out of that triangle that's been in place since January. While we remain above that broken resistance line from January at $2.75, looking for a top of 2020 price channel target as high as $7 over the next 1 to 2 months. If you're cautious on the shares, maybe wait for an end of day close back above that old June resistance at $3, let's call it $3.65 over the next few sessions. Just wanted to show, hopefully for people who maybe think that this is a slightly academic exercise, that the charting can actually deliver the goods. First stock here is iBio, which was looked at last week, I suppose in the $3 to $4 area, and obviously we've gapped up today up to $6.66, the number of the beast on that one, and possibly looking for even more on the upside here. Let's say there is a possibility of drawing a trend channel, or a resistance line there, heading up as high as $9. So basically, while we're above that broken resistance line from February at $5.50, we could hit $9 on iBio. Another situation which may be of interest, which has done rather well over the last few sessions, is PDS Biotechnology. Here we've reached the initial target here at the top of that rising trend channel from February at $3.30, have now pushed up to $4 and could hit a best case scenario target here as high as $6.50. So that is an interesting setup there for this particular stock, even though we've already pushed up so high. That's it for me today. More updates tomorrow.